Well, good afternoon, everybody, and thank you for joining us today. We'll be talking about federal resources and that are available to small businesses and their staff. Could we advance the slide, please? Thank you. The bipartisan bicameral omnibus COVID relief deal was passed in late December by Congress. We'll provide some new information regarding the PPP and EIDL programs and cover some of the lesser known resources that are also available to small business and or staff members. For those of you who are listening, please share this information about federal resources to anyone who is unable to join us today. A recording of this call is available at the ndresponse.gov website. And if you have questions after today's briefing, you can call 701-239-5131, and that is the North Dakota SBA's phone number, or you can email the SBA at north.dakota@sba.gov, or you can email the Department of Commerce at businesshelpcovid19@nd.gov. Well, my name is Sean Kessel, and I'm happy to be joined today by Al Hout, who's the District Director for the State SBA Office. Al is responsible for overseeing SBA programs and services across North Dakota. This includes the lending programs, most of which are guaranteed loans, through local lenders and SBA's advising services provided through their partner programs, the Veterans Business Outreach Center, SCORE, and two additional partners that also happen to be commerce partners, the Small Business Development Center and the Women's Business Center. Before Al jumps into his comments, I want to provide a big picture overview of the bipartisan bicameral Omnibus COVID Relief Act, and I promise that's the last time that I'll refer to this legislation by its formal name. The legislation we're talking about today has a price tag of $900 billion. It was attached to a $1.4 trillion year-end spending bill, bringing the total cost of the package to approximately $2.3 trillion, making it one of the biggest spending bills likely to be passed by the 116th Congress. Approximately $429 billion of the package will come from repurposed, unused Paycheck Protection Program funds, or PPP funds, that were appropriated in CARES Act in March of 2020. As I mentioned at the onset, we'll be covering a few things related to small business staff members as well, and this is the first of those items. There are provisions that allow individuals, including children, with annual income of below $75,000 to receive a one-time $600 disbursement. Now, I'm personally aware of several people who have already received this disbursement, so they have begun. There are also several changes to the Supplemental Nutrition Assistance Program, which is often referred to by the acronym SNAP. Increases in the monthly SNAP benefit level by 15% based on June of 2020 Thrifty Food Plan, and that increase will exist through June 30th of 2021. This legislation also simplifies the state administrative process for SNAP, and the benefit level increases and provides $100 million to states to cover those costs. It also excludes the pandemic unemployment compensation from being counted towards household income for the SNAP qualification purposes. And it extends SNAP eligibility to college students who are eligible for a federal or state work-study program or have an expected family contribution of 0 to their college experience. It provides $400 million in emergency food assistance through September 30th of 2021, and up to 20% can be used for commodity distribution. So now that you know the magnitude of the federal investment and a little more about how individuals will receive direct benefit, I'd like to turn the mic over to Al Hout, and he will share some specifics about the Payroll Protection Program, or PPP, and the Economic Injury Disaster Loan, or EIDL, and the Shuttered Venue Operators Grant. Al?
Thank you, Sean.
You're welcome.
I certainly appreciate the opportunity to share some additional information, and we can jump to the next slide. And I will say my screens may be slightly delayed, so hopefully this will work smoothly. But again, I appreciate the opportunity to share some additional information on the, as we call it within SBA, not the big omnibus bill, but the Economic the Economic Aid Act. And that's what details out the revisions to the Paycheck Protection Program, as well as some of these other programs that we'll talk about, a revision of the Economic Injury Disaster Loan Program and the Shuttered Venue Grant Operators Program, commonly known as Save Your Stages, or Save Our Stages. But overall, the intent of this round for economic assistance, SBA was charged with providing that relief to what we call the hardest hit communities, those in underserved markets, such as low to moderate income areas, businesses owned by women, minorities, veterans, etc. Those are our primary focus in rolling out SBA's program, is to focus on those areas first. So you will have heard in the news that the program for paycheck protection, the first go around, was open last Tuesday for businesses that were focused in those low to moderate income areas, those underserved markets. And we wanted to give lenders that specialize in those, in serving those communities, the first crack at the program to make sure they get access to the program, to the funds they need. So as we talk through this, a lot of the programs, just understand that it's going to be rolled out in phases to make sure we hit those high need areas. The other thing I want to highlight is that these programs are not necessarily broad grant programs, stimulus programs. Sean mentioned the extra $600 that everybody is getting. Those are broad stimulus incentives given to everybody. These programs, the SBA programs, are supposed to be reserved for businesses that have been negatively impacted by the pandemic and need those funds because the current economic uncertainty makes these funds necessary to support the ongoing operations of the business. So we want to make sure we reserve those funds for the businesses that absolutely need the funds to survive. We'll talk about some of those on the next slide, but just know that if your business has pivoted and doing well, then these programs are not necessarily for you as a grant program. So the first program that I'm going to talk about is the revision to the PPP loan program, and we call that the first draw PPP loan. It's for businesses or individuals, entities that have not received financing under the Paycheck Protection Program before. So last summer, spring and summer, we had the Paycheck Protection Program. If a business didn't qualify back then, chose not to do it, then they are eligible for the first draw PPP loan. The eligibility for the first draw this go around, this iteration, is virtually the same as last spring and summer, but we do have some expanded types of entities that we can finance. And we'll talk about those in just a minute. It also expands the types of eligible expenses. So the main focus of this program is to keep individuals, your employees, paid and on your payroll. So it is still an employee retention program, and the whole gist is to be able to maintain your head count and your payroll. And if you can do that over the intended time frame of 8 to 24 weeks, then the loan may be forgiven. In addition to the payroll expenses that you can cover, there's also some expanded eligibility expenses Traditional expenses for the Paycheck Protection Program included some general operating funds for rent or some debt payments, utility payments, etc. We've now expanded that to include more operating expenses, including some supplier expenses. If you had some damage that came out of the civil unrest last summer and you still need to pay those can be rolled into this first draw PPP loan and potentially forgiven if you qualify forgiveness at the end of the term. And we also allow some increase in loan amounts from the original calculations. The way we calculated the loan amounts last year have been modified, so some businesses may qualify for increases, or if it's your first go around, you may qualify for a larger loan than you would have last summer. Now, this program is set to expire on or before March 31st, or the appropriations run out. Now, we feel like there's plenty of funds, as Sean mentioned, several $billion that were allocated to this program. So we anticipate the funds are going to be around very close, if not past that March 31st date. So there is the potential it could be extended, but for right now, it's set to expire on March 31st, 2021. On the next slide, we will talk about some of the specific types of entities that are eligible for the first draw PPP loans. And any applicant for SBA programs must comply with SBA's general size standards and eligibility criteria. Now, types of businesses that are eligible are sole proprietorships, sole proprietors, individual owners, self-employed individuals, any type of traditional business entity, such as a partnership, a corporation, limited liability company, etc. And from last year, we did allow 501c3 nonprofit organizations, tribal businesses, and 501c19 veteran organizations to be eligible for the Paycheck Protection loan funds. This go around, we've added some new entities such as housing cooperatives, destination marketing organizations, which are like your Visitors Bureau, and then also a big one that we've had a lot of questions on is certain 501c6 organizations, like your chambers of commerce, are now eligible for the Paycheck Protection Program, as well as some news organizations, newspapers, radio stations, etc. Next slide, please. For the second draw PPP loan is for borrowers that have had a PPP loan, whether it was last summer or if they get a first draw PPP loan now. But in order to qualify for the second draw PPP loan, borrowers must have used the first draw PPP loan for its intended purposes within its intended time frame, which is 8 to 24 weeks. Individuals or the companies must have less than 300 employees and suffered at least a 25% reduction in gross revenue or receipts for a comparable quarter when comparing 2020 to 2019. So if you look at the second quarter of 2020, April, May, and June, and you compare that to the same time frame in 2019, if your revenues were reduced in that time frame by 25%, you can qualify for a second draw PPP loan. For the most part, the maximum loan amount is going to be the same process, where you calculate the maximum amount using 2.5 times your average monthly payroll costs up to $2 million. That is a slight change under this first draw. You're allowed up to $10 million. Under the second draw, we're reducing the loan amount so that we can serve more businesses. One exception to that 2.5 average calculation is for borrowers in the accommodation and food service industry, such as hotels, restaurants, and such. If your NAICS code, your North American Industrial Classification System code, begins with a 72, your maximum loan amount can be calculated using a multiple of 3.5 times your average monthly payroll cost. Again, it's still limited up to $2 million, but the calculation uses a larger multiple, so you can get a larger loan amount up to the maximum of $2 million. Second draw PPP applicants must submit their information to their lender using the updated SBA Form 2483 SD for second draw. And those forms are posted on our website at www.sba.gov/PPP. And I believe we have that later on in the presentation. Next slide, please. When we talk about eligibility and we say the applicant must have used or will use the first draw PPP loan amount only for eligible expenses and within the intended time frame, the covered period of 8 to 24 weeks. So if you have to, as a business, document support to the lender that you've used the funds for the eligible purposes, such as payroll, and it has to be used 60% for payroll and other eligible expenses such as rent, utilities, debt payments, certain debt payments, and certain supplier payments, etc. You have to be able to support that you've used the whole loan amount for your first draw PPP before the lender can disperse your second draw PPP loan. So you might have your first draw loan, you're using the funds, you're getting near the end, you might decide that you need additional funds, and you can go to your lender, make application, and they can start the process. But you have to be able to support that you've used the entire loan amount, all the loan funds on those eligible expenses before the bank can give you the second draw PPP funds. Businesses have to have no more than 300 employees. That is a slight change from previously. It was under the first draw, it is 500 employees. Under second draw, again, we want to focus on those businesses that are hardest hit. Smaller businesses tend to be that case. And by reducing the eligibility to 300 employees, it will allow us to serve more companies more broadly. And again, they have to be able to demonstrate that they show at least a 25% reduction in gross receipts between the comparable quarters. If your loan is above $150,000, you have to support that at the time of application to get your loan approved. If your loan is under $150,000, then you need to support that at the time of forgiveness. Our suggestion is you're going to have to support that one way or the other. The sooner the better. So as long as you can support that, you will need to be able to support that for your certifications on your application, and you might as well then present that to the lender so they have it on hand. On the next slide, we'll talk a little bit about the forgiveness process. Borrowers, again, this is a guaranteed, and I will say a guaranteed loan for the time being through your local lender. The funds come from your lender, and if your business follows through with the complete eligibility for forgiveness, meaning you've used the funds for their intended purposes within the intended covered period of 8 to 24 weeks, then you can apply for forgiveness to the lender. There's the forgiveness application form. It's on our website again. You complete the forgiveness application, provide all the documentations, and you submit that through your lender. The lender then has to process that through SBA. That process has been running relatively smoothly for the PPP loans from last summer, but I do want to urge a little sense of patience in how the forgiveness process has worked to date and how the new application approval process is going to work for the future. On current forgiveness applications that are currently being processed by SBA, SBA's system is doing a data validation to make sure that we review all of the eligibility criteria on the applications that the businesses have certified are true and correct. That has taken a little time for SBA's process to validate the data, verify it, check it. In some cases, it kicks it out to call it a yellow flag that needs an additional review by an SBA staff person. And based on the volume of 5 million paycheck protection loans from last year, it just takes a little time to get through that process. On the new applications that for the first time, first draw PPP and the second draw PP today are all going through that data validation process at the beginning. So it is going to take a little longer for the approval. It's not going to be instantaneous like it was last spring and summer. But at the end, once the loan is approved and the bank gives the funds to the business, we can rest assured that at least the upfront eligibility for the PPP program is valid, true, and correct. Then the only question is, did you use the funds for the intended purposes within the intended time frame to qualify for loan forgiveness? And once you do supply that information to the lender should be able to process that much quicker through the forgiveness portal. A couple other updates is idle loan advances. Prior to the Economic Aid Act, idle advances were supposed to be deducted from the Paycheck Protection Program forgiveness amount. The Economic Aid Act clarified, there was a lot of discussion that many people didn't realize that the idle loan advance of $1,000 per employee up to $10,000 was supposed to be deducted. That created some concerns. Congress listened to those concerns and decided to allocate additional funding to cover those economic injury disaster loan advances. And as such, they are no longer being deducted from the forgiveness payment. And if you had a business that received the forgiveness that had the idle advance deducted, don't worry, SBA is going back. We're reviewing all the loans situations that happened, and we will make the bank and you whole for those idle advances. That is coming, and the bank should notify you in the coming weeks. The other thing the Economic Aid Act corrected is that the PPP loans were meant not to be taxable income, but IRS had indicated that their analysis was that if the expenses were paid by PPP loan funds, they were not paid by the borrower and thus could not be tax deductible on the borrower's taxes. The Economic Aid Act has now corrected that as well and made it clear that Congress did not want those expenses that were covered by the PPP loan forgiveness to be included or excluded, I should say, from tax deductions. And so that's been corrected. Consult the IRS for further details on that or your tax preparer. Also, because the revised first draw PPP loan added some additional forgivable expenses, if you have a loan that is still in process that has not already been forgiven, we are expanding those forgivable expenses to include those other supplier costs and such, and general operating costs. Coming soon, our policymakers in DC have indicated that they are working on a simplified forgiveness application for loans of $150,000 and under. It is still going to have a variety of certifications that the borrowers must certify that they've used the funds for their intended purposes within the intended time frame. So it is going to be slightly more streamlined, but ultimately the certifications are going to be very similar. And in order to support those certifications, you will need to keep those additional documents to support that, that information. So coming soon, if you haven't applied for your forgiveness yet, or you're looking at a second draw PPP and looking to have that forgiven, hopefully the process will be simpler. Switching gears on the next slide, we're going to talk about the Shuttered Venue Operators Grant, and commonly known as the Save Our Stages program. This is a true grant available from SBA. It is going to be administered by SBA's Office of Disaster Assistance, so it's not going to go through your local lender or any of our state partners. It's going to be directly from the Office of Disaster Assistance, and you will be able to go out and use additional information. It's kind of a fluid situation. We've listed some of the basic guidelines, but we're working through the finer details of it. In a broad category, the grant is available to live venue operators, movie theaters, museums, zoos, etc. Think of those live venues that have bring people in for entertainment and not able to operate under the COVID guidelines. The grant will cover most operating costs. There's different categories depending on how large of a venue that you have, on what will be covered and how much will be covered. And you can get more information at the Shuttered Venue Operators Grant website at sba.gov. I would encourage you, if you think your entity applies, there is an email address listed on that web page that you can submit questions to check your eligibility, and they are monitoring those questions to help set policy. So all of a sudden, if there's 100 types of entities all asking the same question of whether they qualify, then our policymakers may look at that and say, yes, there's a need for that, so let's modify our policy to include them. So I would encourage you, if you think you might qualify for that, to go out and check the website. One caution to that is that you can only qualify for either the Shuttered Venue Operators Grant or a PPP loan. So you'll have to kind of sit down and compare each program to which one would most likely benefit you before you apply. You should only apply for one to make sure that your eligibility doesn't get crossways in the system. You can only qualify for either the Shuttered Venue Operators Grant or a PPP loan. Couple of miscellaneous items. Our EIDL, Economic Injury Disaster Loan applications deadline, has been extended to 12/31/2021. It originally was set to expire end of this last December. We've extended that by a whole year. The Economic Injury Disaster Loan is available to businesses and certain nonprofits, again, to provide long-term working capital needed to help survive the pandemic disaster. And this is the Economic Injury Disaster Loan is a direct loan from SBA. So if you apply for, want to apply for that, you go to the COVID-19 relief.sba.gov website and you apply directly from SBA. Again, this is not a bank loan. You don't process it through the bank. You process it directly through SBA. But this is a loan and it has to be repaid. It has a modest interest rate, but a very long term. So it makes a repayment very, very easy. Also, we have our traditional loan program incentives. Our traditional guaranteed loans are available through local community lenders. And under the Economic Aid Act, it is temporarily increasing some of our guarantee percentages, which is an incentive for the lender to make these guaranteed loans. We're also allowing some fee waivers on our upfront guarantee fees. And as part of the debt relief section of the Economic Aid Act, SBA will make some of the payments to the lender, to your community lender, on behalf of your loan. So there is some incentive for getting a traditional SBA guaranteed loan at this time as well. That's more for if you're looking at expanding your business, doing some renovations to your business, etc. Next slide, please. What do you need to do now? Decide which program that you're going to apply for, and reach out to your local lender. If you don't have a lender, SBA has a lender match program where you can go key in some basic information about your business and your location, and when you hit submit, it'll try to match you with lenders in that area that are looking for additional SBA loans. You can also visit the sba.gov/PPP site for the most updated documents. Once you get there, there's two sections, one for PPP applicants, and then there's another section for PPP lenders. You can look at both of those sections to get information on calculating loan amounts, looking at eligibility, and the application documents. Next slide, please. If you need some additional guidance or help in reviewing some of these programs, help determining which one is best for you, you can contact our office or one of our resource partners, and you can reach them at, if you go to our sba.gov website, you can also subscribe to one of our newsletters, and on the next slide, list all the resource partners that John had mentioned as well. But if you go to sba.gov/local assistance, you can key in your zip code in North Dakota, and it'll pull up the locations of these entities that all provide free confidential assistance in helping you and your business assess your current situation and make a plan for long-term viability. And with that, I will turn it back over to Sean.
Well, thank you, Al. I really appreciate that review of the PPP Idle and Shuttered Venues Operators Grant. I kind of like that Save Our Stages. That's a nice little ring to it. Al is planning to answer some questions toward the end of my formal remarks, so you might want to stick around for that. And I'd want to thank those people who submitted questions when you registered today. So I'd like to walk through a few other programs that impact small businesses, starting with the Pandemic Unemployment Assistance, or PUA. This legislation extends PUA benefits and the federal program covering self-employment and gig workers from December 31st of 2020 to March 14th of 2021. Individuals will be eligible for up to 50 weeks of PUA, and if they are already receiving PUA, they will be able to continue to be eligible for up to 50 weeks. However, no individuals will be eligible to receive PUA after April 5th of 2021. There's also a federal bump of $300 per week. And I failed to mention that in my comments initially, but that's what we're really talking about, is that federal bump and unemployment eligibility. Beginning after December 26th and ending March 14th, they're eligible for up to 24 weeks of unemployment, and individuals who are already receiving the federal pandemic unemployment compensation will continue to receive that until they have exhausted all of it. However, no individuals will receive the FPUC in any week after April 5th. So that's an important date for both the PUA and the FPUC. So another massive change for companies in the new stimulus bill is that companies will be able to take advantage of both the PPP loans and the employee retention employee retention tax credit, which is on the next slide. And it also greatly expands the ERTC in 2021, with the new ERTC credit offering a maximum of $14,000 per employee through June 30th of 2021. Originally, the CARES Act only allowed, excuse me, only allowed businesses to choose between the PPP or ERTC. And I'd encourage you to contact a tax professional to help take both of these programs into account so that you can start your year-end tax planning for this year and for next. And if a business used and exhausted a PPP loan early in 2020, for example, they could then use the ERTC to help them with their 2020 taxes. You may not have taken advantage of the employee retention tax credit this year because you took out a PPP loan, and you now have the opportunity before the end of the year to claim that tax credit and look back at prior quarters and count those wages. Also, the ERTC eligibility was expanded, so employers with 500 or fewer employees are now able to claim the ERTC if they experienced a decline in gross receipts by more than 20% in any quarter of 2020 compared to the same quarter in 2019. So I'd like to spend a little bit more time talking about agriculture and how this legislation has affected and provides some dollars for ag. Obviously, this is an industry that impacts every county in North Dakota and deserves our time and attention. This legislation provides $11.2 billion to support ag producers, growers, and processors. And predominantly, those payments are made to livestock and poultry growers for their losses suffered due to the insufficient processing access or contract changes related to COVID-19. They provide no less than $1.5 billion to purchase food and agricultural products and provide loans and grants to small and mid-sized food processors or distributors. And the third is to provide payment to producers to advance biofuel, biomass-based diesel, cellulosic or conventional biofuels, or other renewable fuels due to the COVID-19 market losses. There's also support for dairy, livestock, and farm stress, and provides $400 million to pay for milk to be processed into dairy products and donated to nonprofit entities, and another $60 million for facility upgrades and planning grants to meat and poultry producers to transition to federal inspection. We'll move on to another industry, and I assume that several of our listeners today own or are part of an ownership group that may own residential properties that are then rented out. This legislation appropriates $25 billion for rental assistance in 2021, which is distributed, of course, amongst all the states, the tribal communities, and other sources. I'd encourage you to do a little bit more research. And 90% of these funds must be used for rental assistance programs over the next 12 months, and the remaining 10% may be used for housing stability services. States and territories distributing these funds must prioritize low-income households and households with unemployed individuals. Landlords may apply for funds on behalf of their tenants. And the expiration date was placed at, the expiration date of the order of the Centers for Disease Control and Prevention, which placed a temporary halt on residential evictions, has been extended through January 31st of 2021. So I hope you heard something today that has piqued your interest and provided you with the awareness and motivation to learn more. There's a plethora of information out there. Some of that information that was provided to you today came from the U.S. Treasury website, the U.S. Chamber's website, and several other sources. I would encourage you to search the web for sites that you trust to learn more, and I've placed a few of them up there for your benefit. Now that the Biden administration has taken office, there's discussion of another COVID relief package. We'll be following that closely at Commerce, and if that package is passed, we'll do another business briefing to make sure that you're well aware of how that may impact you. So if you've done your research and you can't find answers to your questions, we ask that you give us a call. You've seen these numbers before, but the Small Business Administration, the phone number and email is on the screen for you. You can call them at 701-239-5131 or email them at north.dakota@sba.gov, or you can contact the Department of Commerce through our Business Help COVID-19 at nd.gov email. Maria, I think we have a time for a question or two. Are there any questions that have been submitted we'd like to answer?
There sure are. There's a couple questions, and their first one is for the SBA. And the question was, are nonprofits or faith-based entities allowed to utilize the PPP program? So this is for Al.
Thanks, Maria. Yes, as in the first go around last spring and summer, nonprofits, 501c3s, and now expanding that to 501c6 organizations and a few others are eligible for PPP funds, and that does include church groups, faith-based organizations. So yes, they are potentially eligible as long as they follow the complete guidelines to be eligible.
Thanks, Alan. I guess the next question would be for you also. And there was a question regarding corporations that have subsidiaries. How do they claim for PPP? Is it just based on the corporations, or do each of the subsidiaries claim also?
Yeah, that's a great question, and the answer can be somewhat convoluted, but overall, a borrower must consider its affiliates first of all for size standard determination for the Paycheck Protection Program. So you have to be small according to those guidelines of less than 500 employees or less than 300 employees, or qualify for traditional SBA size standards. So we look at the group together as one singular entity to determine if with all of its affiliates, are they still small and do they still qualify? That determination, to help walk through that, there is the interim final rule on the Paycheck Protection Program as amended on our website, starting at about page 27. It's an 80-some page document. Starting at about page 27, talks about the affiliation process. And yes, we would look at the combined group of affiliates for size purposes and maximum loan purposes. So the maximum loan would be $10 million under the first draw, $4 million max for the, $2 million max for the second draw. Combined with affiliates, though, the max second draw is $4 million. So if you have two affiliates, then each can get $2 million. If we had three affiliates, the first two got $2 million. That would hit our $4 million max. The third affiliate couldn't get funds. Now, there are some exceptions to the affiliation rule. If your NAICS code, again, we're kind of gearing this towards our hard-hit industries, the hospitality industry. So if your North American Industrial Classification Code begins with a 72, which is hotels and restaurant, then that expands the eligibility to 500 employees for physical location. Each of those locations can get their own separate PPP funds as long as they are operating as a separate entity and they have their own separate EIN number. So as I mentioned, it can get a little bit complex, but overall affiliations, businesses that are co-owned by a similar group of people and have a similar focus, have similar management structures, managers that are across different entities, are all considered affiliates and would need to be combined for those eligibility determinations.
Thanks, Al. And the last question that we have is regarding the start date. Now, you mentioned that the PPP loans are already available for underserved. Is there a specific date where everyone can apply, or how does the process work that way?
Yeah, so as of 8 a.m. Our time, Central Time, on Tuesday the 19th, our SBA loan portals opened up for all lenders and all applicants. So that's no longer an issue as far as the rollout goes for PPP funds. Anybody can apply today through your local lender, and your local lender can begin processing that application no matter where you're located or what type of business you have.
Thank you. That's the last of the questions that we received online. I'm sure there's many more. That's why I've left up the contact information so people can reach out if they have additional questions. Back to you, Sean.
Thank you, Maria. I'd like to end today with some gratitude and thank all of you participants for joining us today, for your questions, for your time. I'd like to thank Al Howlett for joining us, our amazing partner, GNDC. I'd also like to invite you to attend the next business briefing Commerce will hold, also in conjunction with GNDC, and it'll be held on January 28th at noon Central Standard Time, and we'll be announcing the second round of the Hospitality Economic Resiliency Grants, the HERG Plus, and the ERG grant cycles. We anticipate those beginning in February. So we'll also announce the timing related to each grant and a few changes with regards to eligibility. So if you're able and interested, please register at the GNDC website and join us for that business briefing. My last thank you is to all the folks who work behind the scenes to make this and many of the previous business briefings available to you. That includes Maria Efforts-Hansen, Tricia Miller, Jolene Lyer, Tammy Hike, Carla Koenig, Kim Schmidt, and from Commerce, all those are from Commerce, and then Amanda Remenzi from GNDC. So I'd like to turn the mic over to Chris Kalish from GNDC to provide a couple closing remarks. Chris?
Hey, thank you, Sean. I'm Chris Kalish, the Director of Membership Services at the Greater North Dakota Chamber. On behalf of the Greater North Dakota Chamber and the North Dakota Department of Commerce, thanks for joining us today. A recording and the materials from this business briefing will be available at ndresponse.gov's COVID-19 page in the Business and Employers section and at ndchamber.com, along with all previous business briefings. You can also go to ndresponse.gov for a variety of business resources, including details on the North Dakota Smart Restart and FAQs on many other topics. Please stay safe, be North Dakota smart, and stay engaged as we get through this together.
Once again, thank you for joining the GNDC Department of Commerce Better Business Briefing. If that will end our live session.